Hello friends, in this video we will compute the remaining profit ratio and it is the numerical from the ratio analysis and the numericals based on the profit ratio. So let's start with very first example. See, very first they are saying we have to find the gross profit ratio. We have to find the gross profit ratio. We have to find gross profit ratio. How to calculate the gross profit ratio? See here friends, how to calculate the gross profit ratio. See what they have given. Opening stock is 50,000, purchase is 1,50,000, wages paid is 10,000, sales is 2,50,000, closing stock is 40,000, purchase return is 20,000. So we have to calculate the gross profit ratio. Gross profit ratio. What is the gross profit ratio? It is nothing but the gross profit upon sales. Gross profit ratio itself, it is a gross profit upon the sales, or we can say it is a gross profit upon revenue. Revenue is nothing but your money earned by selling. Money came due to the selling. That's why it is a gross profit divided by sales. So here, what is a gross profit? What is a gross profit here? The gross profit here is, see here friends, how to calculate the gross profit. If you think directly that sales minus purchase, that will give you a gross profit. No friends. See, because the item that you have sold, right, item that you have sold, then some purchase return is there, right? So opening stock is there, closing stock is there, right? And also you have some purchase something. That means that money you have spent, the money you have spent on the wages also, right? So while calculating the gross profit, you have to add sales, closing stock and the purchase return, right? Purchase return. Why purchase return? Because assume like think like if you are a shopkeeper, right, and you are purchasing something for reselling, right, and that you have returned to your wholesaler. That means you got your money return. You got your money return. So we have to add 20,000. That's why adding sales plus closing stock plus purchase return, you will get total is 3,10,000. 250 plus 40, 290 plus 20 is 3,10,000. Then see, opening stock is 50,000, purchase is 1,50,000 and wages paid are 10,000. See friends, you are purchasing something as a shopkeeper. Suppose you think you are purchasing something, that means you are spending money. You are paying wages to your workers, that means you are spending money, right? Here all money you are all money is inward, the income you can say in the right side. In the left side I have written all is expenses, right? When you add purchase plus wage, that is 150 plus 10, you will get 160 plus a 50. Remember, always remember, opening stock is always at the left side, or we can say it is in the we can say while closing stock is always in income side, and opening stock always at the expenses side. So easily you can come to know what portion you need to add and what portion you need to subtract friends. See here, adding sales, closing stock, purchase return, you will get 3,10,000. Adding opening stock, purchase and wages, that is your expenses and it is your income. In short, we can say gross profit is nothing but what is, it is gross profit, it is nothing but income minus expenses. Income minus expenses. So what is your income? We have added 3,10,000. What is your expenses? We have added, it is 2,10,000. So 3,10,000 minus 2,10,000, you will get 1 lakh. Your gross profit is 1 lakh. So we have to calculate the now gross profit ratio. What is gross profit ratio? It is gross profit upon the sales. What is gross profit came here? It is 1 lakh, right? So 1 lakh divided by what is the sales they have given is 250. So 250,000 into 100, you will get GPR. 0 cancel, 0 cancel, 25 4 is 100. So you will get 40% as your gross profit ratio. That means your gross profit is 40% of the sale. Your gross profit is 40% of the sale. So this is the general numerical for 3 marks. Both for JAIIB as well as CAIIB. In JAIIB account section paper and in CAIIB your advanced bank management and ratio analysis. So we will move to the next numerical. See friends, next numerical is very important, because in this numerical we are calculating two ratios, two profit ratio. One is the net profit ratio, and another is we are calculating operating profit ratio. See what the things they have given. Very first, sales, or we can say revenue or sales, that is 2 lakh. Gross profit is 75,000. Office expenses 15,000. Selling expenses 26,000. Interest on debt is 5,000. Accidental loss is 12,000. Income from rent is 2,500. Commission received is 2,000. Okay. Now they are saying calculate the net profit ratio. We have to calculate the net profit ratio. See friends, how to calculate the net profit ratio? See, what is net profit ratio? Easy to remember, very easy. What is the gross profit ratio? In the last example, it is gross profit divided by net sales. Similarly, net profit ratio is nothing but net profit divided by net sale. Net profit divided by net sale. That is your net profit ratio. So here is the formula for the net profit ratio. Now, what is the net profit? See how to calculate the net profit. How to find the net profit? See here, gross profit they have given. So what you have to do? While calculating the net profit, you have to add all the income. And you have to subtract all the expenses. Then you will get net profit. See, for very first 75,000, it is your gross profit, right? Plus income from rent, it is your income. So add the income, 2,500. Plus commission received, it is your income. So added 2,000, right? Now see, minus 15,000. What is minus 15,000? Because it is expenses, office expenses, so subtract it. Then selling expenses, it is expenses, so subtract it. Interest on debt, you have paid the interest, that's why subtract it. This. Then accidental loss, it is a loss, that means you have to bear the expenses for that, right? So subtract it. So friends, in this fashion the net profit is calculated. And how to calculate? See here, you have to add all the income and you have to subtract all the expenses, right? So you have added gross profit, you have subtracted office expense, selling expense, you have subtracted interest on debt, accidental loss, you have to subtracted income from rent, it is income, that's why you have added. And commission received 2,000, that is commission you have receiving, that's why it is your income, so you have to add. So when you solve this, 75,000 plus 2,500 plus 2,000 minus 15,000 minus 26,000 minus 500 and minus 12,000, you will get your net profit is 21,500, right? After solving this, use a calculator for that. Simple calculators are allowed in your examination. So net profit you will come to know it is 21,500. So what is the net profit ratio? It is the net profit divided by net sale. See here, sale they have given 2 lakh. So the remaining thing is very simple. 21500 divided by 2 lakh. That is your net sales. They have given the sales here. It is given here. So use that. net sale into 100. Use the calculator for dividing, or we can say 21,000,000 cancel, then 21.5 divided by 2, you will get 10.75. Your net profit ratio, come to know it is a 10.75. Use the calculator. Simple calculation, doesn't need a calculator also. The simple thing you have to remember while calculating the net profit ratio is how to find the net profit, because sales directly given, we need to find net profit. You have to remember the thumb rule that add all income, net profit is add all income and subtract all expenses. You come to know it is the net profit, right? So you will find it is a net profit. Okay, after that, see, we have to find the operating profit ratio. We have calculated the very first net profit ratio. Second, we have to calculate the operating profit ratio. See, what is operating profit? Operating profit, see here, it is a definition. Many times you have heard the word during banking, that is operating profit of the banks is gaining, but net profit is in loss. The banks are in loss. That means why operating profit is gaining, what are the factors that are not included in the operating profit. That's why we can say assure that all public sector banks are increasing their operating profit day by day. Why? See here, friends, operating profit is operating profit is nothing but your gross profit, plus operating income. You have to add the operating income and subtract the operating expenses only. Remember, while operating profit, while calculating net profit, we have added all the income and subtracted all the expenses. But while calculating the operating profit, we have to add only operating income and subtract the operating expenses only. See here, friends. So what is the gross profit? Gross profit they have given, it is 75,000. Right? 75,000 is the gross profit. Next, what they have given, we have added 2,000. Why we have added 2,000? We have to add the income. See here, friends, very important. There are two income where here you can see two income from rent and commission received. So friends, see here, which you have to add. Very important, the income from rent is never calculated under the operating profit. No, only the commission received came under the operating profit. Why, friend? How to remember? See, friends, suppose the income from rent is calculated in the operating profit. See, suppose bank can purchase a land and it may rent for commercial purpose, or building. Bank have a lot of money. Bank can purchase a building and can rent for a commercial purpose. So income from rent, should we calculate in the operating profit? No, banks are not allowed to do so. That's why the income received by bank from rent or any entity is not calculated in the operating profit, because this is not your purpose. Your purpose is different, right? But the commission received, right, we are getting some commission if we are doing the cross selling. We are selling insurance in the banking, right? So we will get some fee income as a commission. So that is actually calculated in the operating profit. That's why there is a lot of pressure in the banking also. Okay, fine. So that commission received we have to add in the operating profit. So we have added the commission. 75,000 is a gross profit plus 2,000 is your commission. We have to add. Subtract the expenses, operating expenses. See, office expenses are the operating expenses and selling expenses are also the operating expenses, right? That only two you have to subtract. So minus 15,000 and minus 26,000. So after solving these, you will get operating profit as a 36,000. You will get operating profit as a 36,000. See, now the simple task is remaining. Calculate the operating profit ratio. What is operating profit ratio? see here, it is operating profit divided by sales, operating profit divided by sale. So we have calculated operating profit using calculator, you can solve easily that. So 36,000 divided by your sales is given directly 2 lakh, divided by 2 lakh into 100, you will get, cancel this 1 2 3 1 2 3, it is, you will get 18% as your operating profit ratio. That means what you are selling, you will get 18% of it as operating profit, right friends? So we have completed our second case study or second numerical. This is very important for your examination. Very important for your examination, because see friends, because in JAIIB also they are asking, in CAIIB they are most asking around 10 to 12 marks numerical on this module itself. So you have to very take care while solving the numerical, and these are very simple. They are not asking some complicated numerical in a generally examination, because they are want to judge you by only if you are clear with your concept or not. They are not giving very complicated numericals. So you just remember the concept and apply in the examination. Sometimes in the examination you doesn't need a calculator. The simple type of figures they are giving, they are mainly figure giving in round up, right? So it is very easy to calculate. Okay friends, we will move to the next numerical, and there is we are taking more complicated numerical, and this is very good, that because in that numerical we have to calculate all. See friends, here you can easily see here the next numerical. See what they are saying. We have to calculate the gross profit ratio, we have to calculate net profit ratio, we have to calculate operating profit ratio, and we have to calculate operating ratio. That means if you study this numerical only, you can come to know that all profit ratio are covered in this numerical, right? So moving to the next. See friends, what is given? Sales they have given 61,500. Cost of sale. What is the cost of sale? In other words, you can say it is a cost of your CP. It is your CP, cost price. You can say it is a cost price. Cost of sale is 37,500, or you can say purchase. In other words, right? Sales return is 1500. Office expenses are 2250. Selling expenses are 3900. Interest on debt is 1500. Cost by fire, or you can say loss by fire or accidental loss is 3600, and income received from investment is 750. Okay friends, see, very first we have to calculate the gross profit ratio. What is a gross profit ratio? Gross profit ratio is nothing but your gross profit divided by net sales into 100. In the very first example we have studied this formula, easy to remember, but we need to find very first what is the gross profit. See friends, gross profit, the gross profit is nothing but your net sale minus cost of sale. Net sale minus cost of sale, because here they have not directly given the gross profit, right? So we have to find the gross profit, but if they are giving sales and net sale and cost of sale, then you have to remember the simple words. It is gross profit nothing but your net sale minus your cost of sale. And in other words, simple thing, you can say gross profit is nothing but your net sale minus your cost price, When cost of sales is given, you have to subtract it from the sales. Simple word, sales. See, what is the sales given? 61,500. But sales have return. See here, sales return is 1500. So return you have to subtract. So 61,500 minus 1500, you will get net sale. Subtract it. Subtract cost of sale. What is the cost of sale? They have directly given 37,500. So when you solve this, you have 60,000. You will get 60,000 minus 37,500. You will get 22,500 as your gross profit. Alright, so we come to know what is the gross profit. Okay, so we will move to the next. See what they are next is the calculation of the gross profit ratio. Gross profit ratio is gross profit divided by net sale. So gross profit we have calculated this right, divided by net sale. Why? Net sale is what? See here how it is. Net sale is arrived here, 61,500 minus return sale. So we will get 60,000 as your net sale. So divide it. So 100 0 0 cancel, 0 0 both 0 cancel. So 2225 divided by 6 you will get 6 3 is 18 and 6 okay 42, right. So GPR will get 37.5%. You can solve this using the simple calculator, or orally you can solve. So we have calculated the gross profit ratio. Now second task is calculation of the net profit ratio. In the previous example we have studied what is the net profit ratio. It is a net profit divided by net sale, like gross profit divided by net sale. Here net profit divided by net sale. So in the previous example I told you how to calculate the net profit. Net profit is nothing but your all you have to add income and subtract the expenses. So what is the net gross profit? Here we have calculated the gross profit. While calculating net profit you need a gross profit, right? So gross profit is given, that is 22,500. How? Here we have calculated. See friends, here gross profit we have calculated, that's why here it came here, right? So after that gross profit, see what we have to subtract, 2,500. From that we have to see that 3 items we have used, right? Sales minus sales return and cost of good. From that we find the cost of that is the gross profit. Then office expenses are the expenses, so subtract it. Selling expenses are the expenses, so subtract it. Interest on debenture, debt, we can say it is you have to expenses, it is subtract it. Loss by fire, it is also your expense, so subtract it. Income from investment, it is added, it should be added because it is income, so add it. And divide it by what? Net sale. What is the net sale? Sale is 61,500 minus return sale is 1,500, so net sale is 60,000. So when you solve this you will get 12,000 divided by 16,000 into 100. So 12 5 is 60, so you will get 1 by 5 into 100. So it is, you will come, it is a net profit ratio, it is a 20%. That is your answer, right? So we will move to the next. See what we have to calculate, the operating profit ratio. In the previous example I have studied, we have studied and I have told you how to calculate the operating profit ratio. See friends, operating profit ratio. Operating profit ratio is nothing but your operating profit upon the net sale. Operating profit upon the net sale. So what is operating profit we have calculated here? See, operating profit we have to calculate. See, 22,500. What is this? What is this? This is nothing but your gross profit. This is nothing but your gross profit. We have to calculate the operating profit. In the previously I told you how to calculate the operating profit. We have to add the operating income and subtract the operating expenses. So gross profit is your operating income, gross profit minus 2250. ऑपरेटिंग ऑफिस एक्सपेंसेस सब्ट्रैक्ट करना है, सेलिंग एक्सपेंसेस भी सब्ट्रैक्ट करना है, और लास्ट इन द लास्ट वी हैव एडेड द income from commission. But here there is not given the income from the commission, but income from investment should not be added while calculating the operating profit. So operating profit is gross profit minus expenses divided by your net sale, that is 60,000. How? 61,500 minus 1,500. So when you solve this you will get 27.25%. that is your operating profit ratio. Now what is the operating ratio? What is the operating ratio? The last point we have to study in this chapter, you can say it is the operating ratio. So how to calculate the operating ratio? See friends, here operating ratio, it is nothing but the cost of sales plus operating expenses divided by net sale. In other words, what is this operating ratio? All your expenses, that is nothing but your in a numerator is expenses, you can say. So in short you can remember it is expenses divided by net sale, right? That is your operating ratio. See, so what is the cost of sale? The cost of sale they have given 37,500. So 37,500 plus what is the operating expenses? in the last video and in the last example and previous two example, office expenses and selling expenses are your operating expenses. So add office expenses plus selling expenses and divide it by net sale. What is net sale? Sale is 61,500. Subtract the sales return, you will get net sale. So when you solve this, you will get answer as a 72.25%. So friends, in this video we have studied all the profit ratio. We have studied all profit ratio. The one thing you have to do is you have to subscribe Banker Zone. You have to subscribe Banker's Zone and also press the bell icon. You have to subscribe Banker Zone and also press the bell icon, because when I will upload the new video, you will get instant notification, so that you will not miss any case study or any numerical. So friends, all the best, and don't forget to subscribe and share Banker Zone. Thank you friends.